Let's start with the TDI. Traders Dynamic Index is the long form of the TDI. We use the TDI on our 4 time frame only. That's where we use the TDI. So I labeled the TDI, and these are the parts that you need to be aware of, the parts of the TDI. So we have the volatility bands, the blue bands here. These are called the volatility bands, and they are coordinated with this yellow line in between, which is called the market baseline. So if you are aware of the RSI, the relative strength index, is it the relative strength index or indicator? See, the RSI has the levels, like we have the middle level here, which is the 50. We have the level high, which is the 70. We have the level extreme high here, which is the 80 level. Like we have the 50, the 70, and the 80. But then going down here, we have the level low, the 30. We have the level extreme low, which is the 20 level. So we know that the market swings up and down. So the market baseline here is used as the moving middle line, like it swings with the market. So it's the 50, but it's the one swinging with the market. And we have this black line here, which is the important line that we use. It's called the RSI price line. And then we have the signal line. The signal line is the red line. Now, when price reaches at extreme levels, like it's in level 3 and it's big extension, you'll find that the TDI, the RSI price line, is on the extreme levels, on the extreme low or on the extreme high. So when it's on the extreme high, we call it a bullish divergence. A bullish divergence means that there is a possibility of a drop there. So we wait for a drop there. So when the RSI price line is on the extreme low, it's the bearish divergence. So on the bearish divergence, we expect the market to buy. We expect the price to buy, to reverse, to go wrong. So another thing is that when the RSI price line is outside the Bollinger Bands, I mean the volatility bands, and then it comes back in, we call it a shark fin, like a fin of a shark down here. So this one is a shark fin. And when a shark fin happens on the bearish divergence or the bullish divergence, it's a good shark fin. So on the TDI, on the hour 4 times time frame, we usually look for the shark fins. And the shark fins helps us to identify the peaks. So when a peak is formed, we should see a shark fin. We should see that the RSI price line is outside the volatility band. So this is a peak. This here was a peak reset. So a peak reset usually occurs around the midline, but the real reversals like this one, they are on the level high or level low, and sometimes on the extreme high or the extreme low. So if there is a sharp fin and the price is, and the RSI price line is on the bullish divergence or on the bearish divergence, then it's a solid gold peak. We had it on pound USD 2 weeks ago. Another use of the TDI is in our 4 time frame, we can count the levels using the TDI. Like you have your shark fin there, and there is level 1, level 2, and level 3. You have your shark fin there. See, this is like level 1, level 2, and there's a slight level 3 here. So we can count the levels using the TDI on the hour 4 time frame, but sometimes it's not clear. And also the TDI on the hour 4 can help us on, see this level count. This is very clear. We have level 1, level 2, level 3. As you can see here, the levels were clear. So sometimes you see a peak extension on the market maker cycle. So you expect a reversal after this. This is a sharp fin here. We have level 1, level 2, and level 3. So here also the ADR time 3 is up, and we expect a reversal, but the dealer extended the peak. So also on the TDI, you'll see a peak extension here. And the dealer would, the RSI price line would go further down or further up. So those are basically the uses of the TDI, and we only use it on our 4 time frame. So from there, any question? Any question there?
Okay. That's fine.
Any question there?
No question.
So it's clear. So we move to the quarters. We move to the quarters. Swiss franc. So on our template, we have what we call the price line grids. These lines, the horizontal lines here, they're like gray lines, almost black. So when you point on the line here, you see a pop-up there is sweet spot, and it usually pops out the price of the price at this level here. So the price here is 1.000. The price here is 1.01. Here is 1.02. So the price line grids are the quarters, and they usually show the prices of the whole number prices. The whole number prices, these are 3 decimal place. The zeros are 3 here. This one is 1.00. So the quarters, we have the major quarter. Major quarter is like this one, the 1.000. So from 1.00, we have 2.0. We also have 3.0. When you go to the weekly, we can find it. This is 0.95, 0.9, 0.85, 250. These are the major quarters, the major quarters. Between a major quarter, this is 752. Between a major quarter, like this one, this is 0.8, between 0.8 to 0.9. That's 0.9. There is 1,000 pips. You can see here, this is 1,000 pips. And in between, you can find the 500 pips here, the 8500. And in between the major quarter and the major quarter, there are major quarters. The major quarters are these 79900. From 1, we have 9900, we have 9897. So they're divided into 100 pips. And inside the 100 pips, we have 25 pips. So we break down the 100 pips into 4 quarters. This one is 100 pips from this major quarter to major quarter. In between, we have minor quarters. They have 25 pips. This is 25. This is 50, 75, and 100 pips. So we have the major quarter, the major quarter, and the minor quarter. So from there, any question before I proceed?
No, but
Yes.
so these quarters, they're in the template, or do we set them ourselves?
It's on the template. They're on the
Which one, the EDR or TDR? Or which one?
The TDR. You see the quarters, when you put the quarters on the exotics.
Okay, because I just uploaded a chart now, different page. Just wanted to check if I do see these quarters, and I'm looking at it on a 4-hour and a daily. I can't see it.
Which template is that?
Right now, I just went on the TDR template.
TDR
I'm
has
not seeing. Yes.
Has the quarters.
Okay, because I just put it on EuroCAD. I mean on CAD, USD CAD. But in which time frame? 4 hour or?
Okay, then there's a problem there on your indicators list.
Okay.
On your indicators list there, you should have the price line grids.
Okay, price line grids,
The
indicator
AFP
list. Okay.
price line grid. So if you have only added the template without adding the indicators, that's why I send you the templates and the indicators, so that when you load the template, it would have all the indicators that I have.
Oh, okay. I'll look into it.
Okay.
It's not a train smash. I think I'll look into it. It's just something that I couldn't see. Okay, it's a AF price line grid. Okay.
So I'll send it again to the group today.
Okay.
So any other questions? I think there is no question there. So how do we use the quarters? Well, we say some of the quarters, especially the major quarters, not the major, the major quarters, act as support and resistance points. So some of the quarters act as support and resistance points. It's where the dealer would reverse the price. So you can see here on USD Swiss franc, dealer has reversed the price here. It's come at this area here. We broke it till this area. This was an area of support or resistance. So simply went wrong, broke it again, and he reversed at this quarter price here. So when you see price reversing around the quarter price, you should understand that at that area is an area of support or an area of resistance. So on the quarter theory, let's talk of the quarter theory part. On the quarter theory part, see, quarter theory is a strategy. Some people use only quarter theory to trade. So on the quarter theory part, they say that when price breaks the quarter, like this major quarter going to another major quarter, there's a 425 pips gap, the quarters here. So once the price has break the first 25 pips, we should expect the price to go 100 pips. That's how the quarter theory guys use the quarters. So they will trade the 75 pips here. That's their theory, like they only trade 75 pips. So they wait again here. If the price breaks and it is broken the 25 pips, the first quarter, they will enter trade 75 pips again. So here you can see it failed to break this quarter. It's only broke and came back. So this one is a solid gold for the people using the quarter theory. So they will trade again 75 pips here until this quarter here, the 500. That's how they use the quarter points. So in MMM, let's take a look on USD card before it has dropped. See this peak here. This peak here, this was an area of resistance. Like price has hit for the first time, came back the second time. Let me use this was the first hit, the second hit. So these two hits here creates an area of resistance. So price came again for the third hit. So people were selling around this area. So the people using MMM were selling, people using price action were selling. So the dealer simply extended the stop band here. And once he reached the major quarter, he only extended the stop band for 25 pips. No, this was 50 pips. We know that the dealer dealer stop bands for the dealer is between 25 to 50 pips. So he only used the 25 to 50 pips here to do the stop band and then he reversed. So this one was a stop band here. So if you see the dealer is on the quarter price and you see a stop band between 25 to 50 pips, so you know that price will reverse there. You need to understand that that's only a stop band. You can see here, this is a quarter price. This was a stop band, 25 to 50. Stop band, and he reversed. And this one was 100, 100, 100. So he went to again 200 pips. Here only bounced 100 pips, 100 pips, 100 pips. So you can take the 100 pips from this bounce here. So you would apply the quarter theory there, and then you take the 100 pips. Well, I guess that's all. That's how I use the quarter theory. And another thing about the quarters is that on higher time frame, let's take a look on NZD USD. No, was Euro New Zealand also? So Euro New Zealand around this area here. Remember, I drew that price would reverse at this point here. So I saw this. This was the cycle here, the uptrend. The peak was here. So dealer completed the cycle around this area. But he extended. You see this? This was an extension of 100 pips. Like this was the stoppant here. So it's like a peak reset, but this was simply an extension of 100 pips here. Stoppant, 3 swipes. And so he reversed on this quarter. So he was only finding this quarter price for him to reverse. That's why I drew it that the dealer would reverse from here. So sometimes I look at peak extensions using the quarter prices. Let's take a look on Euro USD today. I think there was a quarter. Yes, so this one. There is a certain price action group. I saw a sell signal, Euro USD, like sell around 1300. So this one was 1300, 1.1300. But using quarter theory here, you can see that the dealer simply extended price to, let's take a look how many pips were there. This was 25 pips and he failed to break it. So with the quarter theory here, if he fails to break the 25 pips, he would reverse. And here there's the 800 EMA. So this here was my reversal area today. And once I saw that the retail traders were selling, so I knew that this is level 3 for the dealer. That's a lot to take in, I guess. So any question there? Any question?
Yes, Norbert.
I hear you.
Yes, Norbert. Can I just want to ask something?
Yes.
So on the precisely on this quarter theory, because I see it might also help. As long as if it's next to the quarter levels and it's during the formation, we take the execution on the 15-minute or 1 hour. Doesn't matter.
Yeah.
Or precisely on higher time frames only.
No, you see all the entries are taken on the 15 minutes. So if you go to the 15 minutes,
okay.
the quarters are there. Like you can see them.
All right. Now I just found the templates. I just found your template that you sent me. I'm actually loading them now. I want to see it properly.
Okay, no, but if you could go back to the H1 on the Euro USD kindly. So I need to understand something. I see the M was created on Friday.
The M.
The double M. Yeah, the 22 up there.
See the peak was here.
Yes, on Friday. Yes. So that means the quarter theory appears on the 333 down there on the extension of the third level. That's where we apply the quarter theory, right?
Yes.
On the extension of the third of the third level, right?
Yes.
Okay. So it could be downward or upward, whichever way.
Yes, I usually use the quarter theory on the peaks, especially.
On the peaks, so that's the third level when you're finishing.
Yes.
Okay. Noted. Then, sorry, no, but just something else. After the peak, do we expect an M or a W, or it just peaks out automatically and goes to without creating the M or the W?
So here, for example, on this peak, I expect a big W here.
Okay.
In order for it to reverse.
Okay, fine.
So our
so
theory
back to the
on
same
the
level.
Yes, our theory is on the peak, as I said.
Okay.
So you simply add on the quarters there. It gives you a better edge.
Fine. Thank you.
So any other question there? perhaps I should talk of the blue tracer bit, and we end our session for today.
Yep. I'm still, if you don't mind, you'd share with me the templates with EMAs. I still need that.
Okay.
Thank you.
So let's go to the blue tracer. The blue tracer, as we know, it shows the yesterday's high and yesterday's low price. So how do we use the blue tracer? We use them on peak trades. During peak formations, let me use the whiteboard. See, during peak formation, the dealer has applied the brakes today here. So we expect a big M on the hour 1 time frame. So when it comes for the second leg, it's the blue tracer that the dealer is finding. So you find him forming a pattern on the 15 minutes here on the blue tracer. So there is where you take your entry. The same to the W. So you find on the 15 minutes there is a W on the blue tracer. For the hour 1, it will be the second leg W. That's how we use the blue tracer. The first use of the blue tracer is that we have the peak trades. And usually on the peak trades, the dealer would break the blue tracer. Like this is the blue tracer. Find that the Asian range is right here. So this is the Asian range. So it may come out with the 3 swipes here. And the third swipe, he would break the blue tracer. He may form a V pattern, an aggressive one, or he may form an M pattern here, a good M pattern with the pin candles and all that. So once you take a trade there, usually blue tracer trades give you 0 drawdown. So if you take a trade there and you find that in 3 hours, 2 hours plus, dealer is still chopping around this area, then you should expect an extended stop and high. So advice for you to scratch out your trade and wait for another entry. And this is where the dealer would come for the third leg maybe, or an extended stop hunt there to form a head and shoulder, the other one. So if you enter your trade on the blue tracer and you find that in 2 hours, 3 hours time, the dealer is still chopping around, then you scratch out. Another use of a blue tracer is the high test pattern and the low test pattern. So you find your blue tracer here, and the high test pattern and the low test pattern can occur on the peak or on the stop hunt for the second level going third level. If this is the peak, we have a peak here, peak high. The first level, first day here. Second level, second day here. So the dealer applied the brakes here, came back to consolidation. So he consolidated for the Asian. This is the Asian. So you would find the dealer, he will come with a pin on the yesterday's low. He may come for the second time with a pin. He doesn't break the low. Only pins, and then you find the 200 EMAs around this area here. So this is a solid pattern here for a stop hunt. So this one will be a stop hunt high to the 200 EMA. And there you'll find your safety trade. So some people may take this. I do not advise you to take it, but if you want to scalp these pips here, it's good. And for pairs like pounds pound pairs, you may get 50 pips here. And then you may trade the M here to enter your short trade and have your third level there. So this is the low test pattern. So sometimes it might happen on yesterday's high, you call it the high test pattern. So let's take a look. It happened on pound USD. I mean on pound card. Pound card. This is pound card here. This was the lotus pattern last Thursday. It came down here for a pin and the second pin and went to 200 EMA. So your target here is 200 EMA. Sometimes it may happen on the peaks. It doesn't break the peak, it only pins. So there your target is not 200 EMA. You know that this is a high test pattern or a low test pattern, and it's your entry there. So that's how I use the blue tracer. Any question there?
No, but
yes.
Once it touches the 200 EMA, I can see it goes back and breaks the blue tracer on the low on the day low, the blue tracer below there. So does that mean that you only so question is this, yeah? Does the same apply if the blue tracer is tested upwards? It does not get broken and comes back down. So where do we wait for it? Because when the blue tracer has been touched below, we are targeting for an entry around the 200 EMA, isn't it?
No.
To sell.
Yes.
Now, if it's the other way around, what EMA are we targeting?
If the other way around.
Yes, if it hits the high, the blue tracer on the top.
Well, that's a peak trade.
Oh, that's
I tell you, yeah? Yes, sometimes it may happen on the peak, and sometimes low. I mean, on yesterday's low, it will be a peak there.
Okay.
Okay.
Yeah.
So, any other question? I have less than 1 minute here.
Yes. How many pips do we target after it touches the 200 EMA on selling?
1 times ADR.